G'day traders, 1 minute mindset reset. Looking across at Detroit, Michigan. No town like Motown. Great city. Just here for my daughter's swimming regionals meet. Bit of a windy day in Windsor, Canada, but today talking about how to filter down the best pairs for the session that you're trading. An excellent question from a trader, and I've gone over this in previous videos, but I have a bias and tendency to look for shorting opportunities. So one of the things that I will look for is, as I scan through the instruments, obviously the day count, I will look for a pair that has potentially been at maybe a day two high of week opportunity. Maybe it's already broken out of a weekly range, or we've already had a break in structure, a failed breakout in the London session. I trade the New York session, so if we're looking at pairs, sometimes it's a day where there's major red news, and it may be something where we need to wait until that news is released. It could be 8:30 New York, it could be 10 a.m. New York. So obviously that will affect how I will look at the indexes. But if it's a US dollar cross, sometimes because, as I said, I follow the Swiss, the yen, and the Canadian dollar. Often the Canadian dollar will offer good opportunities in the US session, but it may not be set up the best. There might be just a high of day collapse for 25 pips, and sometimes on a day, if that's all you can get, that's what the market gives you, that's what you take. If I was looking for biased in the long direction, I would be using the same approach. I'm looking for pairs that might be dumped down prior to the US session opening. So you've heard me say this before. If it moves before the session starts, get very suspicious that they're going to be moving it in the opposite direction. So if, for example, they dump it down prior to the US market opening, major red news, no major red news. Mondays, for the large majority of times, will never have major red news on the day. So Monday, often, if there's a setup, it will trade as per normal. You've heard me say that if there's no major red news, trade it as normal. After major red news, New York open, that sort of situation, trade it as normal. Once the market has released the news and the equity markets are open, it's going to probably behave as it will. If there is no explosive move or no major momentum type of setup on the major red news, then I will trade it as normal. So if it's a high a day opportunity to sell it, once that market breaks down and coils and pulls back, I'm going to be trading that as I would. I would short that market down 25, 50, whatever type of setup it is. Obviously, high of week opportunity, day three, maybe a news catalyst opportunity. Well, obviously, when we get a first bounce trade in that scenario, well, then we'll be holding on to that to see how that plays out over the duration of the trade itself. So filtering the pairs out comes back to just focusing on the best trade setups. You're not trying to guess a direction or anything else. It's either there's a setup or there isn't. So out of those 3 US dollar crosses, they may all move, but maybe only one is a really true, clean, textbook opportunity. And again, I'm looking for easy money. I'm not looking to try and guess the direction or be in a direction and ride the escalator up. I'm looking for the elevator down. And the same thing applies in the long direction. If they've taken the escalator down, I'm looking for the elevator up. So that's the difference when I talk about sizing in. It's hard to size into something that's on the escalator, moving back and forth, back and forth, back and forth. To me, that's stressful. That's time, the time you have to sit and hold on to that, second guessing all the way through that trade. Should I get in? Should I take the profits? Should I get out? Should I add more in? As opposed to an opportunity where the elevator is about to go down, and as it's about to accelerate and move, I can add positions in, and as it's blowing off, be taking money out, holding on to the positions that are left in there for the full duration of the trade, locking in the money and walking away. So again, once you start to just hammer home on these setups, you know what type of instrument is displaying those characteristics, you know how price should behave, you know when you're in that trade, how it should be moving. It shouldn't be coming back against you, which is why I talk about the max stop on currencies, 15, maybe 20 in a volatile situation, but very rarely is that the case. On oil, gold indexes, 25. That's the max stop loss I'm going to take on it. Because if it's starting to accelerate and I'm adding positions, it should blow off in the direction of the trade. So hopefully it's warmer where you're at. It's not too bad, but it's definitely cold. But there it is again. No town like Motown, the big D, Detroit, Michigan, US of A. Enjoy the rest of your day, traders. Focus on the best instruments that show you the best opportunity in the session that you're trading. Lock it in, get off the screen. We're about to start the new week. Make it your best week ever, traders, and may the markets go with you.